All right, folks, now each January, investors wait with bated breath for my next guest to post his 10 predictions. So let's bring him in. Crossmark Global, the CEO and CIO, Bob Dahl. Bob, so we got your 2025 recap. As usual, it's pretty good. A lot more checks than X's. We can't go over the whole thing, but I do want to zero in on the equal weight outperforming because even though that wasn't the case for the year, recently that has been the case.
We got that so wrong. You're absolutely right, but we're seeing that broadening now. I don't know if it's going to continue or not. It will depend on earnings. Down cap, the earnings have not been as robust as up cap. That's got to change for the trend that we've seen recently to continue, Charles.
So you're halfway there, inflation being sticky, rates fall less. You know, a lot of people are saying maybe with this new Trump Fed and even the current Fed that maybe the de facto number's not 2% anymore, but 2.5%, 3%. Does that change anything for you?
Not a lot. Look, the Fed keeps saying 2. One of them said 2.0. We're not going to get there absent a recession. We're going to stay closer to 3, and that's troublesome because the markets are expecting 2. It's part of the reason the PE ratio in the stock market is as high as it is.
Yeah, let's do that. Stock correction, 10%. We got the 19% swoon. But PEs, I just started the show saying Citi is looking for 24 PE, which is kind of unheard of for a large firm to even be comfortable with that. Again, are we at a new normal?
I don't think so. Look, back to the inflation question. If inflation's going to 2, 24 PE is fine, thank you. And if it's staying closer to 3, we got to move that PE down a few points.
I'm going to get to some more specific stuff, but you also, I found fascinating, your key global economic forces for the next decade. Structural downshift in China, overnight data from China was absolutely awful, but I keep hearing from the financial media in America that they've beaten us already, that we've lost, that, that we should all teach our children Mandarin so let's talk about this because there is an arms race in AI, and there may be some other things in the next 10 years between us and China.
We are in an economic Cold War with China. There's no question about it. And it's going to oscillate back and forth, to and fro, and it's going to be confusing, disappointing at times, elating in other times. China's got a worse long-term issues than we do related to demographics and debt, and we've got those problems too, Charles.
Let's talk about this year. One thing that you kind of talked about, even long-term, but even near-term, the Federal Reserve, right? Obviously, everyone's excited. That didn't feel like a hawkish cut last week, but you say maybe there's a good chance the Fed under-delivers next year.
I think so. Look, some of the expectation of lower rates was taken out at the last Fed meeting, as you know. I think because of back to the inflation story, if inflation stays 2.5 to 3, they're not going to be able to do a lot unless we got a lot of economic weakness. We'll get some, and that's part of what this recent cut was about, but I don't think there are a lot more Fed cuts coming.
Got to ask you about AI order cancellations. And when I read this, I'm thinking about telecom order cancellations back in 99, 2000. As much as we call it the dot-com bubble, it was really the telecommunication services stuff and all those wires and fiber optics that we didn't need after all.
So true. And over-ordering and inability to deliver and the financial problems. Remember, Charles, those stocks back then were so much more expensive than the Mag 7 today. A lot of them didn't have earnings. Some of them didn't have revenues. It was price to eyeballs, price to clicks. That's very different this time. That doesn't mean we don't get overextended, but I'm not convinced we're there yet.
Okay, that's good news. So let's talk about some picks here. You like Qualcomm. Talk about an oldie but goodie.
Yeah, good way to put it. And it's priced as an oldie, which is part of the attraction. As you know, they're diversifying their business. They've lost some ground with Apple, and that's part of the reason the stock has been held back. But they're diversifying. They've got lots of flexibility. They got a little AI. They got a little cloud, enough that I think it's interesting at the current price.
I tell people who want to read about an entrepreneur, read Brad Jacobs, right? He's just phenomenal. Let me ask you about Citi. Financials, I think everyone kind of feels like the financials are in a sweet spot, so to speak. Why Citi perhaps over JP Morgan or Goldman?
I own all of those three, and I would recommend them all. Citi, because it's lagged a bit, it's cheaper than the others. It's selling barely above book, Charles. They've got a lot of interesting things happening, a lot of things overseas with Citi more than some of the others that I think are pretty interesting as well.
And Gilead?
Gilead, great story. They just got another sign of an approval today. This company is doing great work in AIDS and AIDS-related, both actual occurrences of it and how to treat it, and prophylactic products too.
Bob, I can't wait for your 2026 predictions, my man. Hopefully we can do them as soon as they hot off the presses. I'll see you soon. Merry Christmas.
Sounds like a plan.
All right,
All
cool.
the best. Bye.